Absolutely. As I mentioned in the presentation, the key feature of these results is the impact of currency. Because almost 80% of our earnings are now non-rand earnings. When the rand strengthens, you see the impact, and that's almost 3 billion rand of impact. So that is absolutely correct. Operationally, we're fairly happy.
I see it cost you 12.1 percentage points, at least on the EBITDA level, 5.1 billion rand. Now, does that become a concern to the extent that it's a risk to the business?
Well, it's not a risk per se, in the sense that, you know, we don't. It's not money that we've lost. It's really just how we account for it. And that is really, I think, one of the reasons that we feel that we should have as wide a earnings base as possible, so that we're not completely dependent on just the rand dollar and naira rand cross currency, because those are very strong. But that's the reality today.
Yeah, but as we said, operationally, the performance of the company very, very sound indeed. Strong subscriber growth across all geographies apart from South Africa. But let's begin in Nigeria, which is now obviously your biggest market now. 30% growth on subscriber numbers. I mean, is that sustainable?
Well, all it's indicating is that the market is still very strong. But yes, as you go deeper and deeper, you might get 30% increase, but you might not get as high a quality subscriber.
Yeah.
So we think that for the next 3-5 years, there's still going to be double-digit growth, in Nigeria. How fast it drops off, I guess, is anybody's guess. It's difficult to say. But more importantly, in local currency, it was effectively an over 30% increase in revenue, which is important.
But at the same time, we're also seeing some of the regulatory issues that plagued South Africa coming into Nigeria. How much do you think they will have an impact on the business?
Well, I think in Nigeria, one of the mitigating factors on interconnect is really the fact that we have, almost 80% of our traffic is on net. Because almost 80% is on net, the impact of interconnect is less muted, or is more muted rather. But your point is still right in the sense that how the South African regulatory environment is handled invariably is always has implications outside South Africa as well. So we hope that it remains very constructive.
As I said, South Africa probably the biggest drag in terms of earnings growth as well as revenue growth in this year. The other geographies, Nigeria very good, Iran also a very, very strong performer, 45% up during the year.
Yes, 45% up on revenue, and I think you saw that 45% up on subs, but you could see that on revenue it's even more impressive. In local currency basis, it's well over 70%. So very strong performance. I always try to put into perspective that in Iran the business has grown to the size that South Africa is today, but that happened really in 3 years as opposed to 14 years. So by any standards, we're quite delighted with the Iranian operation.
Any more growth left in that market?
There is. I mean, Iran is most probably today at about 65% penetration. If you compare that to South Africa at about 100% penetration, there's still some substantial growth in Iran, both in voice as well as in data. So there's still quite an opportunity.
Net finance costs, one of the big negatives, up 203%, but you do explain that it is a function of the currency volatility. So how do you manage it though? I mean, surely it must be concerning to you now.
Well, we manage it with great difficulty, in the sense that currency is one thing that we can't control, but what we try and do is try to ensure that firstly we maximize loans that the operations take, and put a natural hedge by them raising money in country with the local banks, and therefore have the component of dollar-denominated debt or hard currency-denominated debt per operation being reduced. So that will hopefully reduce the oscillations and volatility in those functional losses on currency. But it's very difficult. We try to balance it as best as we can.
When people look at MTN and the growth it has had over the years, I think people generally are impressed. But the question I think that begins to come in after all this growth over these years, how much growth is left in the businesses that you currently operate? Because when I look at those markets, I see Nigeria is still growing, Iran is still growing, the Middle East, most of it is still growing. But how much growth is left in all the markets that you operate in now, do you think?
It's a very difficult question, but as you asked a bit earlier, if Nigeria is growing at 30% in subs and revenue, and Iran is growing at 45% in subs and over 70% in revenue and so on, Uganda after 10 years, you're still getting double-digit growth. It really means that there's at least 3 to 5 years of solid growth left in these businesses. Now, obviously, it's more competitive and so on. But, South Africa is really the only extremely mature market. I mean, because, the penetration is over 100%. But save for South Africa, the other operations have still got meaningful growth.